Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, and Brent crude oil is trading little changed really in Asia this morning, up ever so slightly, a few pennies up and down, a few pennies this morning. Currently trading at $71.11. With WTI a few dollars behind, deep into the 60s at 66.98, below $67 a barrel on WTI. Despite all the dramas that one can read in the headlines, there's not a lot of movement or direction in the energy markets. Let's kick off with Omar Najia, as always, Global Head of Derivatives, BB Energy. Omar, your thoughts this Monday morning, a listless oil market.
Well, yeah, I mean it fell heavily, I think, and we're very close to about 66.30, call it. So about $1.70 from where we are now. If it takes that out, then I think market will become visibly, let's say, bearish, and you'll see a lot more selling. I don't think this market is going anywhere short term except down. I think basically Trump coming in is structurally bearish oil prices. I think the fact that they have a quote unquote deal with Saudi, I think is very telling. I think the distance between Saudi and Russia is also very telling. Saudi hasn't joined, although it's been invited to join core BRICS. Still hasn't said yay or nay. So all in all, I don't think that this market is going to do much. And with all the geopolitical tension and all this kind of blah, 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 all we do is fall. So I think path of least resistance is lower. If we take out this 66.30 level, then I think it'll accelerate to the downside. Then I think we're going to see something with a five handle, so 55, 52, 58, whatever it is. But I think we're going to come out. The longer things go sideways, the more pressure is built up like a kind of coil. So basically, people trade, buy, sell, buy, sell, buy, sell, buy, sell. When it breaks, I think you're going to see a lot more interest come in. You're going to see people basically covering their length. In other words, selling their length out, and I think you're going to see fresh selling coming in. And don't forget, this is before December, before winter, before a seasonally strong oil market. So it's giving you, it's giving you all this. It's like a horse that's like lying on the floor with its tongue hanging out, and it's the race is about to start, and you're like, let's go, let's go. And it's just looking at you like, we ain't doing it. So I'm a seller. I'm bearish, still bearish.
Rachel Ziemba, Adjunct Fellow, Center for a New American Security, Senior Advisor at Horizon Engage. Rachel, just picking up on some of the thoughts there from
Mhm.
Omar. I mean, we look to the US from a distance at the moment, and it continues to be a strange and wonderful show with very dire consequences. But my question to you is, which of it is a circus that we should ignore? Matt Gaetz to be the top attorney general. Last week, he was being charged with, child, you know, pornography or whatever it is. I mean, there's this somewhat insane appointments, and then there is the other half, or I don't know if it's half, but ultimately, my question to you: which part of this circus should we look at that is serious and consequential for the direction of energy markets going into 2025?
So thanks for having me, Sean. Pleasure to be here. I think some of the most important things are sort of twofold. One is this sort of debate that's going on in the Trump camp around trade policy and tariffs. It's been one of the reasons we haven't actually seen a lot of names on the economic side right? They were very public, in a sense, acrimony over who should be the Treasury Secretary, particularly around issues of tariffs. Now, of course, the Treasury Secretary doesn't actually have a lot of formal rule over tariffs. That's the role of the Trade Representative, the Commerce Secretary, and we still don't have names for people in either of those posts. So that's important. Omar was alluding to the demand issues and things going flat. I think one of the reasons we've seen this sell-off, not only in oil markets, but especially in the broader risk appetite of equity markets that have given back their gains, has really been that some tariff concerns have come back into the picture, as well as the oil specific issues. So I think this question mark of that's going on, as I say, around tariffs. And the other one is the foreign policy nominees, right? We've seen a set of names, Marco Rubio, not Gates, but Waltz. These are on the margins hawkish. Hawkish definitely towards China on a trade and other side, but also to some extent even a bit more hawkish towards Russia, perhaps than we might think Trump himself is. Now, the issue here is we can't do all of our leaf assessing, because at the end of the day, Trump himself is going to weigh in on a number of these issues, and there's still a long time. There's still things that can affect the oil market out of the Biden administration, on, for example, sanctions enforcement and the like. I'm not saying they're going to make a massive difference, but they could set up for the U.S.-Russia relationship, in ways that are important. So for me, it's the economic policy piece and this sort of foreign policy element. And of course, over the weekend, we were sort of very much focused on who's the energy team, right? And there I would say not just Chris, Wright in energy secretary, but also Burgum in a new National Energy Council, and all of that's very focused on domestic production, which at these price points, hard to really see producers wanting to bring a lot of additional supplies in the market. So I'll stop there.
Paul Hicken, editor-in-chief of Petroleum Economist. If Rachel had just said what she said to us in front of the OPEC 22 countries, OPEC plus, how do you think they're digesting? I mean, there was the sense that they had postponed their decision to increase supply until after the election, and then they sort of postponed it to the 1st of January. They are meeting now, the next sort of big calendar item for the international oil markets, OPEC plus meeting. Your thoughts on how they should be digesting what they'll be taking away from this Trump policy, Trump government forming for the direction of travel and U.S. oil production and tariffs into the new year?
Yeah, that's a good question, Sean. Thanks for having me back on. I think, first of all, Rachel's right in terms of, I would agree with Rachel in the sense that while it's positive, all the noise around the US appointments, Chris Wright, he's an oil and gas expert. He's very positive for US production. At the same time, economics is what drives the US market generally and the price points. I think from when Trump came in last time, if you look at that, he put maximum pressure on Iran. He was supportive of the oil and gas industry, but at the same time, it was a different market, and he backed off a little bit on Iran when it was going to affect U.S. consumers. He wants to see slightly lower prices at the same time as supporting the oil and gas industry, which fits together well for him. So I think OPEC really won't be too concerned about Trump from a domestic perspective, and even from a geopolitics perspective. There's a positive relationship with the Saudis. If he does continue maximum pressure on Iran, well, that's quietly a positive for the rest of the OPEC group, if so. And I think at the moment still, it's still really economics driving this market. It's demand, which is the big issues. China is the new real dynamic, if you think about it, rather than the US for OPEC and where China is going. We've seen, further weakness. 6 months of China weakness now. It's really wrong-footed at some of the market, even if probably at the start of this year we were talking, there was suggestions of a deflationary risk. Now we're really in the thick of real China weakness, and that's what's caused OPEC Plus to kick the can down the road. These voluntary cuts that have been in place to continue pursuing with this strategy, and this is where Omar talked about at the start of your show, talking about why he's bearish. Well, OPEC Plus is the sort of last line of defense of $70 a barrel. So and how long are they going to defend that? And I would argue that they probably will continue defending that, even with the positivity around Trump and the economic weakness. But it starts to get harder and harder.
Omar, just picking up on that, I mean, do you think, what is your expectation? Can OPEC Plus keep this tent inflated with their meeting next month and sort of continue to sort of aggressively uplift this market by further cuts?
In a word, yes. If they wanted to, yes. Clearly so. But I think, I mean, some of the expectations that, Trump is gonna, maximum pressure on Iran. In 2016, when Trump became president, Iran was exporting its oil to India, South Korea, Europe, UAE, Turkey, China, Japan, Taiwan, blah, blah, blah. Now, 2024, Iran exports 91% of its oil to China. 7% to Syria, 2% to Venezuela. So the US, in terms of foreign policy or whatever it is, can do whatever it wants. But it's that kind of train or ship has sailed long ago. So there won't be any kind of, we're going to tighten. And it's the same with sanctions on Russia. And it's the same, I have a real problem with all this kind of talk about weakness, So in the last 3 years, we've seen stories about Russian collapse, Chinese collapse, Iranian collapse, going on and on and on and on. And the truth is actually way on the other side. So I'd be really careful with all this kind of, it's them and doom and all this kind of stuff. If you want to look for demand weakness, you don't need to look at China, because China is getting a lot of oil that Western, whatever you want to call them, don't see, right? If you want to look at weakness, look at Europe. Look at the decimation that's happened in the German industrial production, demand for oil, demand for plastics, this kind of, it's been a complete and utter decimation. So in my view, I don't look at weaknesses. So the US is strong. The US has energy. The US has LNG. The US can frack. The US can become, I expect the US to become more and more isolationist. Europe to be kind of, let go, so to speak, because it's basically doesn't have anything, doesn't have any money, doesn't have nothing, absolutely nothing. It's going down the tubes. And it's basically a liability. And then you have the East, which has basically massive resources, the biggest economy on the face of the earth. In fact, quite a few of them, where if you add India, if you add China, if you add Brazil, you add the BRICS, all this kind of stuff. So I think the kind of, the world is changing radically. And I think that, what the US does in terms of foreign policy, the world has moved on. Tariffs, if you look at tariffs, China, it's great. We're going to put tariffs. China has about $400 billion worth of trade with the US. It has $1.4 trillion of trade with the global South. That train has moved on. And this is the kind of the dissonance that you see. We're going to do
we just saw last week of the opening of a major Chinese port in Peru, which sort of reinforces its gateway into South America. Rachel, just picking up on some of those trends. I mean, over the weekend, a big story, really. Biden approving Ukraine to use U.S. missiles, long-range missiles into Russia. In the dying hours of this presidency, Joe Biden can still impact things on a level. Your thoughts on that decision, what it could do to the theater of Russia, Ukraine? There was warnings by Putin earlier in the year that if indeed NATO US did this, it would be deemed as the NATO US joining the war as one of the parties. Your thoughts of the significance of this?
Yeah, I mean, I think it is a significant move. That sort of many supporters of Ukraine are sort of asking why it took this long, given in the like. It's hard to know. I think timing of sort of time running out, but also this element, that we saw sort of overnight, or into sort of yesterday of, sort of Russian new attacks on Ukrainian energy infrastructure, stepping things up. And so, I mean, look, clearly, I think in a sense, both broader sides trying to take as many gains on the ground as they can in this time before, there are pressures on both sides for, an end to the conflict. I take Omar's point about, the sort of, Russia collapse narrative being overstated, but it is true that the cost of waging this war is quite expensive for Russia. That doesn't mean it can't continue on for a long period of time, but there are areas where they're hurting. The other thing that I think is looming, relating to Russia is this question of what is going to come in the next sanctions package. I know one of the targets that was out there in the press, the Japanese press really only, was a question of whether Gazprom Bank would finally be added to that list and what impact that might have on further reducing gas flows. I think it's clear that the Biden administration is trying to step up a little bit more on enforcement, but they're still not doing that much. Overall, I think we will, there is this rhetoric, I think, that's coming out of the Trump camp of wanting to, maybe escalate to de-escalate, a rhetoric that they used in the last sort of administration. I think enforcement is going to be, if anything, more difficult as they're sort of moving around people, to do other priorities such as deportations. One place I might just very quickly, sort of maybe not fully disagree with Omar, but just raise a counterpoint. It's true that U.S.-China trade has come down, though it includes some important energy and resources that we pay attention to. But I think it's important to look at where's the end users, the end buyers in the global economy. And therein, yes, Europe is sort of sluggish and demand is not there, but a lot of this trade, a certain portion of this trade China is doing with the global South, which consumers are buying the end products, it's still American consumers. And so on the one hand, that's where I think the concern I have is not just China tariffs, it's an environment of more tit for tat tariffs, weaponizing, sort of weaponizing mineral trade. And it just adds up to me as slow global growth and a lot more sort of challenges for business, despite all the deregulated talk. And that's not great for, the market that we track. And at the same time, especially in China, we have this electrification trend, right? And so this structural shift in the type of primary energy demand that they have, and I think therein it also leads to, we're seeing this sort of COP go on in Azerbaijan, this week and last with not much happening there. So any case, all I'm saying is the war, sort of the war rages on, and we have these other, these other fronts, and it's not great for demand.
We'll have to see, I suppose, in the context of the weaponry that is being made available to the Ukrainians, as to what they do with it and how indeed the Russians respond. And like all of these Trump policies, there's one thing to initiate them, to appoint these people, and then the pushback starts, whether it's internally or not. Paul, your thoughts on where this goes for some of the non-OPEC plus, because inevitably we're OPEC and we're on the supply side, if that is indeed the polls that are keeping this tent up at 70 and above. I mean, we're clear that demand softness is present across the major markets, including now, it would appear, the US. There is a supply question here. What happens to this supply arrival coming into the new year? The non-OPEC plus countries who are not bound by any of these quotas that OPEC plus are, and OPEC plus sort of facilitating that. How do you see that playing out going into the new year? Does it feel like the moment is where these two things are a bit more pronounced, or what are your thoughts on that?
Well, I think just to pick up on Rachel's point is that, yeah, I mean, there's the long-term trend of potential demand. If tariffs play out, there's the potential of ongoing economic weakness and demand weakness, and that does really put the cat among the pigeons in terms of supply, not just for OPEC. You're right, but for non-OPEC as well. And I think we see most of a big chunk of the supply this year has come from the US, and it hasn't even been that much, really, compared to previous years. But because demand has been a lot weaker, it's really been felt. What you're seeing as well is like Brazil hasn't really grown for various reasons this year as well, and that's likely to be quite strong next year at $70 a barrel. And then you've got some of the new supply, Guyana and others as well, Canada. There's still enough at $70 a barrel for a lot of non-OPEC supply to come on, and that's been the age-old problem for OPEC always. Is how much do they pick up the tab for other producers to take their market share? And OPEC has always done the maths that it works out, or not always, but for large parts, has always thought the maths works. Rising tide lifts all boats, even if it is to take market share. But I feel that there is, if you are thinking about where OPEC was in terms, and OPEC Plus was, and the creation of OPEC Plus when it went up against US shale, and that sort of as a marginal producer, US shale isn't there in the same way. It's much more mature, much more. This fiscal discipline has been a much more marked part of the US production story now. But at the same time, OPEC Plus has a different issue, which is the demand story it's going up against. And I know Omar played down a little bit China, but China's still the big growth engine for oil demand. And if you talk about Iran, well, Iran needs China. If he's talking about 91%, well, Iran needs a strong China for buying oil, and so it's going to be tricky. And I think one thing we haven't talked about is that from the Trump side is actually the administration talked about filling up the SPR, which actually could be a small positive for some of the producers if we're looking at clutching at straws for 2025.
Well, let's go to the survey question and get a view from the room on which of Trump's policies could have biggest impact on oil prices in 2025. China tariffs, the deregulation that seems to be coming for the U.S. oil industry and for all hydrocarbons in the U.S., repealing the IRA bill, the Inflation Reduction Act, which is somewhat of a contradiction, or none of the above. Ultimately, none of the above. So which of Trump's policies could have the biggest impact on oil prices in 2025? Your thoughts on that? Omar, we saw coming out of the sort of the initial this election of Trump and the subsequent weeks, the very big sort of financial markets bump, if you like, a lot of optimism and excitement of what the Trump policies might bring, equity markets being, as it's called, like Trump's number one scorecard. If that's going up, then somehow he's winning. Your thoughts on that continuing? Has that had its moment, or your thoughts on the direction for that and what it tells us about the wider economic outlook?
I mean, I think it's one of the most profound changes you could have seen for the market. So basically, what this is doing is not confirming that Trump is some kind of genius who's going to revive and do and make America great and jobs for I don't know what and I don't know who and all this kind of stuff. That's not the point. The point is Trump is isolationist, right? So he's like NATO, China, we're going to put tariffs. So what does that do? What happens basically when the biggest economy in terms of GDP becomes isolationist? What does that do? It shoots something, it skyrockets something to the moon. And that something is called inflation, right? So that's why you're seeing, basically, in my opinion, that's why you're seeing people buy American, S&P, NASDAQ, Dow Jones, whatever it is. It's not because he's a genius or whatever. It's because basically inflation is coming in such a big way. I mean, that I think if you hold money, cash in a bank, then basically you're losing it. If you hold money in treasuries, nobody's holding long term. If you hold, 1 month, 2 months, 3 months, whatever, you run a risk that something might happen to those, but you also are not getting enough because the Fed needs to decrease interest rates because they can't afford to pay the interest on the debt. So rates are going to come down. Inflation is going to go up. Isolationism just means basically that you're going to get even higher inflation. And so everything is going to roof. And for Trump, even politically for Trump, I mean, I think my personal opinion is I think Trump and his team and JD Vance and all this kind of stuff are not looking at 4 years, but they're looking much more forward than that. So what they care about, I think, is America inside. What happens to America going forwards, right? Not the geopolitical, this kind of stuff. It's more like, business in the States, what happens to the budget and deficit and all this kind of stuff. So I think he would posture because he knows. I mean, if I know that the US militarily is, not what it was, if I know that the world is basically moving on, then I'm pretty damn certain that people in America know this as well. So I think basically he'll concentrate at home. I think he'll concentrate on saying, look what I've done to the S&P and the markets and all this kind of stuff. And he will basically spend and he will basically make tax cuts, and all this is inflationary. And I think, for the next, 2 years, something like that, everything is going to roof, absolutely roof. That's what I think.
Roof. Rachel, one thing that might not roof, and roof generally means that's the word in Europe for the ceiling or the thing above your head. But I was sort of interested to get your thoughts on what this all means for South America. We did see ahead of the election that Brazil closed down X, Twitter. We've seen over the weekend, I think the president of Brazil's wife telling Elon Musk, I don't know what he is, the deputy foreign everything for Trump, to
Jack of all trades.
To F off. I mean, it's pretty strong language. Marco Rubio, a kind of a Latin hawk against leftist South Americans. I'm just wondering your thoughts on given that the sort of main supply growth of oil in the world, non-OPEC plus supply growth, is coming from the Americas. Just paint a picture of where they all intersect, you think, as there's something to keep an eye on going forward.
Yeah, good question. And just on that sort of X point before we go to South America, of course, I can't help but sort of note the headline risk or the headlines around the migration from X to Blue Sky. Where I am, I'm on both platforms now. But no, I don't mean that as a plug, but I mean, I think there is sort of, question marks. So I will note that X and Brazil came to some kind of détente, and Brazil is again allowing access. So look, I think where Latin America is concerned, big issue is around migration. Trump wants to deport a lot of people back to Central America. That I think is going to come into play with Venezuela policy, on which you're right. Marco Rubio is definitely a hawk, and his ascendancy probably says something about the Miami Cubans and sort of Venezuelan exiles being an ascendant. I think it's going to be difficult difficult for Trump to pull off any kind of normalization with migration deal, but that's going to weigh over the relationship with Mexico and Central America. The USMCA trade deal is up for, sort of rediscussion in a sense in 2026. That's a long time from now. That's going to be sort of a risk. Where Brazil is concerned in production in the Americas, some of this is really going to depend on price, as it is in the United States, right? These are production areas that, sort of are market driven. And so we might see additional production come offline. The Canadians, of course, important, one of US main suppliers of energy, themselves are quite worried about what will the tariff dynamics be. And also, will Trump exact some kind of financial penalty for the fact that Canada's been very slow on meeting its NATO defense spending targets? So I think the bottom line here is, again, we're back to where we started, which is the economic growth environment and price outlook over 10 years is going to drive production decisions. And that's not looking fantastic right now in this interest rate environment and growth environment.
Paul, last word to you, and it's to Europe, obviously, where you sit most of the time. And so China tariffs, the poll gives China tariffs the one to watch for oil prices impact next year. But Paul, I wanted to get your thoughts on the impact in Europe vis-a-vis what might be the most likely place of immediate foreign policy impact on the Trump. And we're already seeing a lot of noise over the weekend on Russia, Ukraine, and then the pressure coming on the Ukraine to do a deal and so forth. And the phone call between the Chancellor of Germany and the Russian president last week, first time in 2 years. As the détente, as this sort of, I don't know if we're in the foothills of the winding down of the Ukraine, but it certainly has all the signs of that. It might take time. How much do you think in there is the rehabilitation of the Europe-Russian energy relationship?
Well, that's a good question. I think, well, you see from an LNG perspective and gas perspective that it's been great for the US LNG exporters. They can swoop in and provided the extra supply to Europe on that regard. It's a tricky dynamic because you look at what was on that poll as well, which had 0% impact, which is the IRA and the potential of Trump repealing that. And where does that leave Europe? I mean, everyone is feeding on the teat of the US IRA, and it's not just the US. It's not just a US impact from that, and it could have far-reaching implications, especially for Europe, if Trump repeals parts of the IRA, and that is actually could potentially be pulled down deflationary, because all the investment and all the activity that's going into that, if that funding starts coming away. I've spoken to people within the sort of Republican inner circle, and the way they talk about COP29, it was just it's like almost like a shoulder shrug. So that's their view of COP, and I think you just think, well, we can see it from maybe a slightly different global South perspective or a European perspective, but from a US perspective, that's how, especially for Europe, I think that's going to be the big one.
Interesting. Yeah, I take some solace. Perhaps from the point of view that America is the home of innovation, and they just can't help themselves but making magic new technology that ends up helping efficiencies and performance. And over the years, even though they haven't signed up to agreements like the Kyoto Protocol years ago, they've still meet the obligations because their technology and their efficiency and performance is what it is. So whatever governments do, the private sector and the technology tends to pick up some of the slack. At least that's the optimistic outlook. We'll wrap it up there. Brent crude oil, as we started trading, a little change this morning in Asia, but up a little bit since we started talking, up at now at 71.32 on Brent, but still down as Omar mentioned in his opening comments last week. And there's nothing sort of obvious that's going to give it too much momentum. We all wait maybe till OPEC announces their next steps, and that could be something that could give direction either way. But wrap it up there. The week must get started. Everybody must get back to work. Rachel Ziemba must get to bed. We're very grateful for her staying up so late. Paul Hicken getting up so early in London, and Omar Najia sitting back and having his cappuccino at a nice leisurely 10:30 in the morning. Thank you, guys. Have a great week. All the best.
Thank you all. Thanks all.
Thanks, Sean. Good to
Thank
talk
you.